Joining us now to talk business and a look at today's markets is Tribune personal finance columnist Gail Marks Jarvis. Hi, Gail.
Hi, Dolly.
Thanks for joining us. No deal today on how to avoid that sequester, so those massive federal spending cuts are going to go into effect. What was the impact of that on the markets?
Well, the market's been holding back. Yesterday, there was this thinking that it was going to hit a new high to go over the level that it hit in 2007 before the financial crisis came. As you recall, the market went down 57% from there. We've been trying to get back to that level, and we almost did it this week. So we are within 75 points of the Dow Jones Industrial Average getting to that high again. But every time the market starts to go up substantially, it pulls back a little bit. One of the reasons being uncertainty about what sequestration will do. Not that it's going to be a catastrophe, but that it could be a drag on the economy.
Well, the market also had plenty of positive, strong economic data that came out today with, we saw U.S. consumer spending up, auto sales up, housing strength, and then consumer confidence boosted by job optimism. But it wasn't all rosy, was it, today?
It wasn't all rosy, but basically the market said it was a lot better than what they would have thought. So we had a shockingly bad number in terms of personal income, a plunge of 3.6% as people had payroll taxes go up and whatnot. But consumers responded well, which is what the market liked about the numbers. The consumption was up a little bit. So you would have thought maybe down with that plunge in income. But instead, what consumers did is they saved less. The savings rate had been up around 6%, and now it's down around 2% again. And the consumer just continues to spend, which perhaps isn't the best thing long run for the economy, but right now gives the consumption that the economy needs.
And Gail, there was also some concern earlier in the day over growth in China and in Europe, but that appeared to dissipate as the day went on, and those positive U.S. data, the positive U.S. data that came out. Short-term relief from the troubling situation in Europe and its effect on the U.S. economy.
Yeah, we continue to be a little worried about the political instability and sharp recession in Europe, almost a 12% unemployment rate there. Also a bad manufacturing report out of China. And yet, if we look at U.S. manufacturing, that delighted investors today. That was up better than expected for 3 months in a row. And so perhaps the housing recovery and whatnot is powering that. And clearly businesses that we thought were going to pull away from making purchases because they were nervous about sequestration did not do that. Manufacturing was up.
All right. Tribune personal finance columnist Gail Marks Jarvis. Thank you, Gail.
Thank you.